Hey, hello everyone. Welcome to 30 CAGR YouTube channel. My name is Raj. So friends, in this video, we are going to discuss about a new strategy. In fact, this is an improvised version of what we have discussed last week. Last week, I released a new strategy and many people found it useful because it is a safe strategy and it gave them so many ideas of how to develop or create their own strategies. Different people have different risk appetites, but that was like a good starting point for many people. So many people contacted us asking a few queries, and then they started developing their own strategies. Now this is an improvised version of that, just to show you how you can change or modify the strategies to make a better return on investment, or to lower the drawdowns further, or to improve the expectancy ratio. So all these sorts of things you can do by tweaking a few things, right? So in this video we are going to see an improvised version of that, or you can also treat this as a whole new strategy as well. Okay, but before we begin, as you all know, one thing that you have to do is to subscribe and hit on bell icon. That's the only thing we ask for, because that's like the real motivation for us to come out with so many other strategies or indicators or algo tools, right? So don't forget, just hit on subscribe button and also hit on the bell icon. So with that, let's get started. First, let's have a quick recap what we have discussed in the last week. All right, so last week we have seen a strategy where we take three entries, probably from 10 o'clock to 12 o'clock, and then at 12 o'clock we exit, reuse the same capital to enter again at 12 o'clock to 2 o'clock, and then again reuse the same capital from 2 to 3:30 or 3:28, right? And the premise of this is to make sure that we don't have stop loss hits in both the legs, like C leg and PE leg. So in both C leg and PE leg, you enter with some premium, let's say 50 rupees, and then you place some stop loss, let's say 100% stop loss in both the legs. And remember, we do it only on expiry day instruments, right? So this becomes 100, and similarly here also we have 100. And when the stop loss gets hit for one leg, what we will do is we will exit both the legs. That way we are ensuring that we will not have both legs stop loss hit under any scenario, whatever it is, and by that we are avoiding maximum losses, right? This is the whole strategy that we discussed last week. And again, once after you exit at 12 o'clock or before 12 o'clock, it doesn't matter, we will again wait and enter it 12 o'clock again till 2 o'clock. This is set to 2. If you consider this as set 1, this is set 2, and this is set 3. And we also discussed about the premiums that we enter for Nifty, Bank Nifty, and Finnifty. Of course, there is Midcap and Sensex also, which we did not try on because the data was insufficient. So we did not try our hands on those two, but you can definitely start trading in those two indexes as well, right? So this is what we discussed last week, and the results were okay. We can just go back and look at the results once. So this was the video I released, new option strategy for algo traders time based. This is part 1. Okay, so if you look at the results, we also discussed about the capital required for this would be around 80,000, and this is the result for 1 year 9 months, which is 21 months. So if you just divide it, I think you are getting a very good profit. You can see the overall profit here is around 51,000, and remember, this is for 3 indices. Okay, now you have to extend it to 5 indices, and then also divide it by 21 months, and then you multiply by 12 months so that you get the return for 1 year. So we have done all the calculation in that video. I suggest you to go back and check that in case if you haven't seen that. We get around 48,000 for all 5 indices 1 year. It is approximately 60% return. And you can see the win rate is 54%, and the drawdown is 6,600. Expectancy is 0.4. Return to MDD is 4.36, and max loss is also important. Max loss is 1,600 rupees. So at any given point in time, you are not losing more than 2%, right? For 80,000 capital, 1,600 is 2%. Now we will see how to improvise this strategy in this video. Okay, I highly recommend, if you haven't watched it, please watch that and come back to this so that you will understand the flow, right? Now the thought process goes like this. What we have done earlier is we enter into a call option and put option, and let's say you entered it 50 rupees premium for both call option and put option. Now 100% is the stop loss. You can also try with various percentages like 50, 60, 70 and all. Even the times also you can just try with various times. I just took 10 a.m. For demonstration purpose. Now once this stop loss gets hit in one leg, what are we doing? We are exiting both the legs. And there are many times when market goes higher, it hits the stop loss of the call option, and then probably it doesn't come back, it stays there itself, right? So we are exiting the put probably for a minor profit only, and this might happen in 15-20 minutes also, and the rest 1.5 hour we are unnecessarily wasting, without holding any instrument or any leg, right? So the decay happens throughout the day because it's expiry instrument. At any given point in time, you see that the time decay generally happens on expiry days. So to avoid this, what we are doing is we are not exiting the put, and we are just trailing the stop loss to cost price. So even if the market comes back in this put leg, we are not losing so much. We are just coming back with no profit, no loss, right? So the loss is only of call option, and then for put option we don't get any loss. It's like basically no profit, no loss. Remember, the goal here is to avoid losses on both the legs, right? So in the earlier session we exited immediately, but here we are not exiting but just trailing the stop loss to cost. If market goes like this or stays like this throughout the day or for the 2 hours, you get a good profit here in the put leg, right? So this is the only change that we are going to do and see how the results would be. I hope you really understood what we are trying to do. In part one, we had a thought process, we have a logic, and we developed the strategy on that. And now we are trying to improvise that a little bit with just change in a particular parameter. That's it. We are not changing the overall logic or the thought process. So let's go back and see how the results would be. Now let's look at the parameters first. No change in the premium, and no change in the stop loss. Only change is, instead of square of all legs, we have just put square of one leg and move SL to cost. That's it. All right. And again 10 a.m. to 11:55, 2 hours, just I have given 5 minutes buffer time. Again 12 o'clock to 1:55, and same 100% move SL to cost, right? And then again 2 to 3:28. Now for Nifty, you know that we changed the premiums to 20, and for Finnifty also we maintain the premiums 20, right? With this logic, if you execute, make sure that you put 0.5 slippage. This is very, very important. Otherwise, your practical results and the backtesting results might differ a lot, all right? And inbuilt slippage can be 0 because we have already applied 0.5 slippage at entry and exit. If you put inbuilt slippage, it will be applied only during the entry. Okay, this is very, very important. And Nifty lot size is that's okay. Let's put 25. Current lot size 15, and then 25. Okay. And last time also we discussed that Finnifty data available only from October 19, 2022, and so here also we would be doing only till July 18th, which is 1 year 9 months. All right, so let's run all the strategies. Now remember, this data is only for 3 indexes, so which means 3 indexes means only 3 days we are trading, so we need to extrapolate or extend to another 2 indices. And also this data is for 21 months, we need to bring it down to 12 months average. So these 2 things we need to do, right? So before we do it, first let's compare the results, whether it is really improving something or not. right? So let's go back to the previous strategy. The overall profit here was how much? 51,000. Now it's increased to 68 or 69,000, which means almost there is like what, 35% or 37% extra ROI, right? Which is like huge. And if you look at the accuracy, okay, win percentage, that is also gone up from 54% to 61%, and the drawdown has come down, which is a good thing really, 6,600 to 5,400. And then return to MDD ratio 4.36 to 7.25. How good is that? And 0.41 to 0.55. This also has improved a lot. Almost 40% increase is there in the expectancy, right? And not to forget, all these can be automated end to end. Okay, I will show you how we can automate that and all. We also have algo tools. You don't, the best thing about time-based strategies is you don't really need to sit in front of the screen and do the trading yourself, right? That's the best part. And let's also look at the monthly breakup. Yeah, you can see almost every year we got some profit. And again, don't forget, this is for 3 indexes. So if you extrapolate to all 5, this will be, even more. All right. Now let's quickly take a calculator and calculate the return. It's 69,000 divided by 3. So each index is giving how much? 23,000. But we have 5 indexes, so it will be 1,15,000. Right? But remember, this is not for 1 year. This is for 21 months. So let's do divided by 21 months to know how much average profit we get for 1 month. Now if you multiply this by 12 months, you get the average profit for 1 year. So it is 65,000 or 66,000. Earlier, if you remember, in the previous video we discussed that it's 48,000 average return per year for all 5 indices. Now it's 66,000 almost. So there is an increase of how much? Almost 18,000 rupees. Okay, 18,000 rupees increase is like huge, right? And not to forget, drawdowns have come down, right? So this is how you need to develop or create your own strategies. You cannot simply go and put some parameters, especially curve fitting strategies. You should never do that. I suggest you to use optimizer features, run optimizer features and all that. Don't do that, it becomes curve fitting. So have a premise and then work on that, so that even if you want to change something in future, you will understand what you have to do and where it is going wrong, right? And then as I told you, you also can automate this end to end using so many algo tools. We ourselves have beautiful algo tools, especially for these time-based strategies. We have both the web version and the desktop version. Desktop version is called Tradebots Desktop and web version is called Tradebots Web. Both are available in this website, bluechipalgos.com. And you can see this is my personal trading. Of course, it doesn't matter, you can get profit or you can get loss, but we already discussed about this in the previous videos. You need to stick to the strategy at least for 3 to 6 months so that you understand how it is performing. Okay, so this is today's result. And also we also have something called MTM graph also. So this is today's MTM graph, and you get a lot of features in this. All the advanced features are available even in Tradebots Web also. There are so many features. You can just log in from your mobile, and end-to-end automation can be happening in that. You don't need to really intervene in between. So that's the beauty of these algo tools. Just a one-time setting, one-time strategy creation you need to do, and once after you do that, every single day, right from entry to trailings to exits, everything can be done by these algo tools. So powerful, so useful. Slowly and steadily you see that your capital grows only if your strategies are good enough, reasonable enough. Okay, your drawdowns must be under the limit. Okay, your maximum loss per day should be within the limit. So if you carefully design a strategy, I think automation is very easy with these tools, and you might see some good results in future. So that's all we have for today. And in case if you need these algo tools, just go to bluechipalgos.com or let us know. We'll put the details in the description. Otherwise, please do subscribe and hit on bell icon. Once again I'm saying, because these kinds of important things will be presented to you if you are a trader. And thank you so much for watching and have a great day.